Stocks slipped to day's low as uncertainty over the US poll result and the US Federal Reserve's policy meet outcome keep investors on the edge. Metals and auto gain even as healthcare and capital goods are the big drags today.
Maruti's parent Suzuki unveils the group's first electric vehicle, the e-Vitara, to be produced in Sanand in Gujarat, while Eicher Motors' Royal Enfield launches a new brand called Flying Flea for its new city EV bikes. M&M2 is set to debut its own version soon.
ABB sees slower growth in orders and long cycle wins, leading to order book and revenue both missing growth expectations even as margins expand on lower material costs. The stock is a big drag.
L&T is set to pick up a 21% stake in E2E Networks for just over 1,400 crore rupees, which is a cloud computing solutions player and a partner for NVIDIA to leverage its cloud computing and data processing capabilities. Good afternoon, you're watching here on Halftime Report. I'm Hormuz Fatakia, with me is Mangalam Malu, and the markets are back to testing lower levels on the important weekly expiry for the financial services index. We started off flat. We were holding on to some bit of green at the start of the session, but again the lower levels are back into focus, especially Monday's low of 23,816 comes into focus again for the Nifty to almost 200 points off the highs of the day is the benchmark index, and the Nifty Bank too now is below the mark of 51,000, almost down 300 points as we speak. The broader markets are leading the losses today. Both the mid cap and the small cap indices are down over 1%. Mangalam, good afternoon.
Absolutely. You know, there is a brutal sell-off that is taking place in the market right now. Every morning, the first half, we try and attempt to hold on to higher levels, and thereafter in the second half, we are seeing this vociferous decline from the highs for the frontline index. Yesterday itself, the decline started much earlier in the day, but right now as well, you know, as the clock struck around 11:30, we saw a big decline in the frontline indices. The Nifty now around that 23,850 mark, perilously close to yesterday's low as well. And the Nifty Bank, which was a relative outperformer, has seen a bigger fall. The mid-cap index down almost 1%. And what will tell you the story of the day are the advanced decline charts. Those crisscross lines come up for you. There you have it. Now you have more stocks declining versus the number of stocks which are advancing. We started the day with more stocks advancing than the number of stocks which were declining. Thereafter, there was a bit of a convergence. Then the stocks which were advancing went far ahead. And, you know, the red line was below the green line. But now, with the mid-cap index actually falling the way it has, we have nearly 1,300 stocks which are declining for about 1,000 stocks which are advancing, telling you that the broader market health is worsening as we progress towards the course of, the financial services expiry and the end of trade itself. So important to hold on to lower levels, but suffice to say that the trend on the market is definitely sell on rise as against buy on dips itself. Let's talk about first of the stocks on our radar today. That's L&T. It will buy stake in Indian cloud company E2E Networks, which is an NSE listed stock. Vivek joins in with more details on this deal. Vivek.
Well, that's right. A very interesting acquisition as far as L&T is concerned. You know, for the style of L&T, not a very substantial acquisition, but interesting nevertheless. So, what is L&T going to do? In total, it's going to acquire close to 21% stake in E2E Networks Limited. Along with that, they will also nominate 2 directors on the board of directors of E2E, and they expect this particular deal to be completed by calendar year 2024. Remember, the current market cap of E2E is close to 8,345. Stock currently perched at the upper circuit. This is going to be done in 2 tranches. The first tranche is where L&T is going to subscribe to preferential shares. This particular deal, L&T will shell out close to 1,100 crore rupees at 3,622 rupees a share. Market cap or valuation at that particular rate works out to a little over 6,100 crore rupees. Now, when you're talking about the second tranche, that's very interesting. L&T will be acquiring close to 6% stake from the founder, and the acquisition will be done at close to 320 crore rupees, valuing the stock price or the share price of E2E at close to 2,750 rupees a share. Market cap much lower than the current market cap, just around 4,640 crore rupees. L&T says they don't intend to make an open offer, so most likely the stake will continue to remain just around the 20% mark. What does E2E actually provide? Offers public cloud infrastructure services, CPU as well as GPU based cloud computing platforms. Along with that, helps customers carry out large large-scale general as well as AI workloads. L&T says it's complementary to the services that they provide. It'll be interesting to see whether there is any more rationale that L&T provides in terms of justifying this particular acquisition, given the fact that if you look at E2E financials, top line in FY24 close to 95 crore rupees, PAT of close to 22 crore rupees. So it appears that's quite expensive on a market cap to sales ratio, but it'll be interesting to see what the kind of adjacencies L&T actually stands to benefit from this particular acquisition.
An interesting acquisition indeed, right? A stock goes up 650% in 2024. Yeah. That's E2E Networks for you. Vivek, thanks a lot for that. Now, the broader markets are selling off, but the one stock that's holding on is Tilaknagar Industries, and that is trading at a record high today. And on our special segment, Insight Edge, Mangalam sheds more light on the stock.
Well, it's been a good performance for Tilaknagar Industries. If you look at it from a business standpoint, yes, the revenue growth has been lower than the historical revenue growth rates, but that's because a key market of theirs, which is Andhra, it underwent a supply chain transformation where the company believes that, growth can actually be in near high single digits, if not double digits, once private players do come into picture when it comes to, the supply chain in Andhra itself. On the other part, the company's reported revenues of almost 700 crores for the first half of this year. Second half is typically better for the Alcobev industry. So if they do a little better than this, then maybe the revenue growth that they've targeted, which is 1300 crore, stands to be beaten by the end of this year itself. Andhra and Telangana alone account for 50% of their total sales. With the new route to market in Andhra, there would be faster growth, and they've announced that they will hold on to their margin X incentives at around 15.5%. Raw material prices are fairly benign right now. So in fact, let's hear out the insight that has come in from Amit Dhanuka, the MD, on the impact of new liquor policy in Andhra Pradesh in particular, and how they project the revenue growth to reflect that in the coming months. Hear him out.
Andhra and Telangana both have been traditionally quite strong for our company in terms of our sales and brandy consumption. Approximately 50% of our total revenues come from both these states combined, and I think next 18 to 24 months, we wouldn't really see that changing too much. I think with privatization, I think what will happen is I think industry is quite hopeful that the sales would increase. Margins, definitely the margin profile has improved. 17% margin which we see is there's a subsidy amount which we have received from the government of Maharashtra. So if you adjust for that subsidy amount, then the margins still come at a healthy 15.5%. And we'll be able to hold it. I think commodity prices have stabilized, so I don't see any challenges on the commodity side this year. So we are quite confident that we'll be able to hold this guidance going forward as well.
The management there of Tilaknagar Industries, the stock at a record high, 16.5% higher as we speak. Now, the other stock that's standing out in this broader market sell-off is Gland Pharma, and that comes after its second quarter numbers. Vinny is here to break them down for us. Vinny.
Yeah, so we're looking at Gland Pharma today. Overall, the numbers were in line. There was not much of an excitement there when you look at it on a whole and a consolidated basis, because the core market growth that was impacted by the US business. There was weaker than expected pickup in US as well as the rest of the world. And the company had actually lowered its FY25 guidance. They said low double-digit growth. Previously, that's spoken about mid-teens growth is what they were looking at. But what is exciting when you look at it in terms of financial, 2% growth, margin seeing a bit of a contraction, profit seeing a decline. But the outlook for the company, that is ex-Sensex, that is where we are seeing better performance coming in. The margins are much better if you remove this side of the business. And the company is also saying that they will achieve that EBITDA break-even guidance for Sensex by Q4 FY25. They're expecting further improvement coming in the next few quarters, keeping an eye out on that, because second half, maybe because of this business pickup, also we could see an improvement coming in. Positive EBITDA is what they will be watching out for by FY26 for Sensex, driven by increased revenue expectations of around 200 million euros. That is the threshold that they're watching out for. Though today we had seen brokerages actually cut their EPS targets and cut target prices, but the stock is a very different story. On the outlook, maybe is something that the stock is buzzing away on.
All right, we take that point. That's on Gland Pharma. A couple of these pharmaceutical stocks, apart from Gland, are actually seeing some bit of a downtick in today's trading session after a bit of an up move that we had seen. So Gland stands out as an outlier here with a big gain that we're seeing. But you pull up, something like a Torrent Pharma, that's lower in today's trading session. MCX, Lupin is lower. Aurobindo Pharma, the pharmaceutical index itself comes up for you currently at the lower end of today's trading range. In that, Gland is an outperformer. Take a short break. On the other side, we'll tell you what are the other stocks which are buzzing around today.
Welcome back. You're watching Halftime Report. Some numbers flashing on your screen. The numbers of Sare Gama. Now the profit is down around 6% on a year-on-year basis, down to 45 crore. The stock has now slipped to the lowest point of the day. The revenues, though, are up 40% compared to the same period last year at around 242 crores. We'll see more numbers as they come in, with more clarity emerging on the EBITDA and the margin front as well. But the stock that we want to focus on here is Hatsun Agro, and that is trading with gains in today's session after yesterday's fall following the weak second quarter performance. Manglam, tell us more on that.
Well, there are a lot of interesting data points coming in from Hatsun's second quarter performance. The first one is that year on year, the revenue growth is lower than what the company had projected. And secondly, what the street had anticipated as well. Why is it that the stock is then moving higher? Because, despite that 8.7% revenue growth, the EBITDA has actually grown by 10%. Margins have improved by about 10 basis points. So 11.5% has turned into 11.6%. The net profit optically is lower, largely because on a reported basis, because depreciation has increased from almost 99 crores to 116 crore. Depreciation is always a non-cash expense. So that has, on a reported basis dented PAT, but it's actually not a bad performance when you look at it from a net profit perspective and the EBITDA margin perspective. Revenue growth has been slower, and importantly, gross margins. Now the trend comes up for you for dairy and the entire industry itself. It's a game of gross margins across seasons. The last 4 quarters, gross margins had consistently increased from 30% to 31.6%. Now, this time around, sequentially, there has been a decline of about 100 basis points on the gross margin itself. The question that we need an answer to is this decline sequential, a start of a new downward trend in gross margins, or milk procurement prices increasing for all these companies, or is this just a one-off? That's the clarity that one seeks, not only for Hatsun Agro, but for all the other dairy players as well. Because, the third quarter is a seasonally strong quarter for all these companies, with a higher proportion of value-added products because of the seasonality factor coming about. That would see the margins being protected. But what is the overall trend on, milk procurement prices is something that we'll keep an eye out on. For Hatsun Agro, a large part of their procurement is also, integrated. So it doesn't impact them immediately. The stock's doing well, but it has seen a correction yesterday. And also at the same time, the results are soft, but they're not out of, they're not very bad or out of place.
Not as bad as feared, and that's showing up on the stock as well, right? Down yesterday, up 10% today, and this surge has made sure that the stock has turned positive on a year-to-date basis, is Hatsun Agro. Time to take a short break, but before we do that, as CNBC-TV18 celebrates 25 years of excellence, we invite you to the most anticipated event of the year, the CNBC-TV18 Global Leadership Summit, bringing together visionary policymakers like Finance Minister Nirmala Sitharaman, RBI Governor Shaktikanta Das, industry leaders like HSBC India's Hitendra Dave, Kotak Mahindra Bank's Uday Kotak, and trailblazing startup founders. Now, this is where the roadmap for India's next 25 years of growth and global leadership will be charted. You do not want to miss this.
Welcome back. Good time to look at markets from an F&O standpoint. Right now, the Nifty is down about 100 points, just under that 23,900 mark after having broken that 24,000 mark itself. The mid-cap index is where, the problem is right now. The Nifty Bank has seen some signs of recovery from the start of the show. So if you, look at the Nifty Bank at the start of the show was down about 0.5%. From there, it's seen a bit of a recovery, now sitting with a cut of just around 140 points itself. The broader markets, that's something that we'll be tracking very, very closely. Why? Because when we started the show, we had the red line above the green line, and now as we speak, both of them are once again converging. So we'll keep an eye out on this one. The India VIX is the other thing that I'm watching out for as well, largely because when the market did see a bit of a decline, the India VIX saw a bit of a spike as well, currently sitting with a gain of just about 1.6%, but at one point was higher by almost 6.5-7% odd itself. 17 is the mark where it is. But one thing is clear, 24,000 is facing a fair amount of supply for the frontline index, and we've seen a lot of call writing out there as well. So upwards of 24,000, 24,150 thereabouts could be some more supply for the frontline index. That is the Nifty that we're talking about. The other thing that we're looking at is at the lower level, there is some traction at the 23,500 put. Now, this is not to suggest that the market will go right down to that 23,500 mark, but maybe these put buyers are looking at some bit of a traction as soon as the market does break some of these important levels. What are these important levels? Yesterday's low of 23,816. The 10% correction mark on the frontline index would be 23,650, and below that is the 200-day moving average, which the street believes will be a very strong support were we to go there. Options expiry today for the Nifty financials. Where are we? 23,457 is the 23,500 put, which is extremely active. So recovery from here will be crucial for the Nifty financials, else these 23,500 put writers will have to unwind their positions. A lot of short positions added on ABB India. And if you look at on the other side, Jubilant Foodworks is one of those rare outperformers today. A lot of long positions being added out there, maybe ahead of numbers, some pre-positioning being built in Jubilant Foodworks.
Important stocks, important levels to watch for as well. Mangalam, thanks a lot for that FNO setup. Posing these questions to Sachitanand Utekar of Trade Bulls, who's joining us now. Sachitanand, good afternoon. Thank you so much for joining in. The same question as yesterday. How important is that 23,800 level on the Nifty? And if we break below that, does the fall towards that 200 DMA get accelerated?
Well, good afternoon, Amos. Good afternoon, Mangalam. I think clearly the market is in a very strong bear grip. Exactly a month ago, we saw a very decisive breakdown below that 25,500 mark, and since then, the Nifty has been trending confidently below its 5 and 20-day exponential moving averages. Now, if you look at the placement of the 5-day exponential moving average, it is currently placed at 24,100. So until unless we don't see a swing above the same, there may not be any change in stance as far as Nifty is concerned. Even if you look at the 60 minutes data, clearly we are seeing bearish flag formations indicating a further drag. So I think from a turnaround perspective, the Nifty needs a very confident closing above that 24,100 mark to really reverse the trend. But currently, the way data is shaping up, we have seen a good amount of writing at 24,000. And if you look at the intermediate support, which is placed at 23,700, I think that particular support may also be violated. So probably we may see a swing, going forward, or a final drop towards 23,560 kind of a zone, where it's 200-day exponential moving average is placed. So I think it's better to be on the short side when it comes to indices. The stop loss for Nifty currently is placed somewhere close to around 24,070 on a closing basis, and we may see this particular decline getting extended towards 23,700 immediately, followed by 23,560. If you look at Nifty bank data, a very similar trend. It has been consolidating for the last 2 weeks, but the important juncture on the higher side is placed at 51,645. So until unless we don't see a closing above the same, we may not see a very decisive change in trend. On the contrary, the way its daily ADX has started, trending towards that 25 mark. In case if we see a breakout there, then probably we may see a further drag, led by Nifty Bank itself. And the next probable support for the index is placed somewhere close to around 50,400, 50,350. So I think clearly the sell-on rise mode may continue for both the indices.
All right, sell on rise may continue, and that's exactly what is happening. When we just started the segment, Sachi, the Nifty Bank had shown signs of recovery. From 0.5%, it had, cut its losses to just about 0.25%. But now as we speak, the Nifty Bank is down about 0.5% once again. The broader markets as well. Now there are more stocks declining than the number of stocks which are advancing. So any attempt at recovery is seeing, persistent selling. What does one do from a stock standpoint then? Do you have any on your list right now from the long side and the short side?
Mangalam, it's a very tricky situation because if you look at the way Nifty has been scaling lower, this is the second time wherein on its daily RSI it has hit the oversold zone. Now, just being in the oversold zone doesn't change the outlook, but we need a clear-cut, divergence to set things on a different note. But as of now, it is better to be or keep a long short equation. There are a couple of pockets wherein the rotation has been healthy. We have seen some signs of divergence. The one stock which has hit my radar on the positive side is Tata Consumers. Now, after a decisive drop and a consolidation, what we are seeing here is a healthy positive divergence shaping up near that 1000 support. The RSI has already started trending higher and the prices were trending lower. So I think sooner or later we may see a very strong change in trend in this particular counter, and that's why we are recommending building long positions here, keeping a stop loss semi-close to around 978 on a closing basis. On an immediate basis, we may see a swing towards 1056, but eventually the stock may scale higher towards 1100. So I think this is one pocket of strength that should be on your radar. And on the short side, real estate stocks have clearly shown much more weakness. Even on the rollover side, we have seen some major positions rolled on the short side. So here, Godrej Properties has shown a decisive breakdown again. We are expecting that this particular decline may continue towards 2630 on the lower side, and that's why any pullback in this particular counter should be utilized to create short positions. One can keep a stop loss at around 2810 on a closing basis.
All right, Sachidanand, thank you so much for joining in, sharing with us your views on the index and specific stocks as well. Take a short break. The management of Bata joins us on the other side. Stay tuned. Back with us here on Halftime Report. On to the management of Bata then, when Mangalam spoke to MD and CEO Gunjan Shah to discuss their Q2 numbers and the road ahead.
It's been a tough period from a consumption point of view, and within that also there's been a very markedly post-COVID K-shaped effect in terms of the lower price points being under pressure. And I have commented on this in the past. We are hopeful at some point in time it does cycle out. I think the primary reason for that has been that the middle, the belly of the consumers, etc., have been undergoing pressure from an inflation point of view that they saw post-COVID. And we are hoping that some of our actions that we are doing a bunch of things, and we see some early signs of green shoots on that, and which is what you commented on, right? Which is to make sure that we are able to bring about great products across at great price points. A classic example is the recently launched Kartik Aaryan campaign with the artisanal leather collection, starting at pure leather products, starting at 2499. I think it's seen great initial response, and we are looking forward to that, plus some of the other cyclical kick-ins, the wedding season, etc., which will be a pretty prolonged one, long awaited after a long time.
Well, at the halfway mark of this year, we are looking at flat revenue growth compared to the same half last year. The second half of this year, what's the visibility that you have on growth? Are we looking at low single digits? Are we aspiring for high single digits, or double digits would be out of question?
Our medium-term ambition has been and will remain basically in the range of about double digits, right? So we will stay with that ambition. We'll have to see how it pans out in the near term, and that I would refrain from giving a forecast, but we are pretty optimistic seeing how the trends had been in the quarter that went by between July to September. So September was much better than what we saw in July. So hopefully that should augur well for us in H2.
Premium products, you said they've done well and their contribution to your overall sales have also increased. Where does it stand at right now? What was the growth delta in your premium products versus the overall average growth of the company?
So I think it would be at least about 3x, right? So the premium products would have grown in significantly high single digits overall, right? Within that, the few brands that I mentioned grew in double digits. So we are also fueling it by obviously a lot of actions from our side. Last quarter we saw, in fact, now for the last 4 quarters, we saw the largest expansion of the Hush Puppy network. Now it stands at almost about 140 stores, EBOs. We are looking at it very aggressively going forward. Similarly, we also opened 15 kiosks now in the last about 8 months in floats. That has given us great response. And also our Power EBO, which is our athleisure brand that we want to champion going forward. That has also seen now 4 stores cumulatively opened in the last 2 quarters. So that's also fueling it, along with obviously campaigns like we've got this whole campaign that we ran with Hush Puppies with
Right.
peanut collection, and that's given us a great response from consumers, etc. So I think all those actions plus the consumer tendency towards premiumization is helping a lot.
We've seen no impact of that on the margins yet, because margins over the last 3 years have only come down. Where do you think they settle?
So there are two parts to this. I think one is at gross margins level. I am reasonably comfortable actually at where we are. Last quarter was a little lower from what I would have desired, but overall from a medium-term trajectory, I think our gross margins have been actually pretty stable. And I don't foresee too much of variations going forward. On an EBITDA level, I think last quarter we actually leveraged our operational efficiencies reasonably well, despite the sluggishness in overall demand. And once we see demand coming through, those leverages should come through. We will obviously want to be even more tighter on our cost efficiencies. There are a bunch of actions that are following through on that front. So I think both of these combined is where my margin commentary would remain. So gross margins pretty comfortable, and we should see stability going forward. Operating leverage should aid the net margins at EBITDA level.
One of the biggest issues one sees as an analyst for Bata have to do more with the brand identity rather than the business of it all. Because while you're transforming, moving up is a little difficult as against moving lower when, an expensive brand selling cheaper products makes it a lot easier than a value brand selling premium products. The risk that one has is that at higher price points, the competition is fairly high, and at lower price points, the demand environment right now is not very conducive. So how do you manage this identity issue while Bata is in this transformation process?
No, great question, Mangalam. And I'll give you an example that tells us how to straddle this entire, how do you say, duality. The great example is, let's say, a product like floats that we have launched in the last about 3 years, right? It's now become the fastest 200 crores in our portfolio. It's most probably at a run rate ARR of almost about 150 crores. And every quarter we seem to have sequential growths like a startup. Now, overall, it's a great premiumization drive. But however, consumers see it as great value proposition. So you can straddle both. You don't need to do only one or the other. Another very, very different example would be, let's say, for example, what we are trying to do with Hush Puppies and now with Power, which is to try and get basically technology leverage going and see whether we are able to leverage that technology to demand the premium that we want from consumers. So you can straddle both, but you've got to provide value to consumers either ways, right? And our secret is to make sure that we've got technology as well as styling to go with it.
And I guess you also have to have different brand names for the same as well, because Floats, Hush Puppies, all of them are separate brand names which don't attach a certain perception with, the existing perception that there is on a brand. Something similar that happened was with Maruti. When they wanted to sell premium cars, their distribution chain moved to a different showroom, which was Nexa. Wonder if you're doing something like that for Bata as well, a different store name, a store identity for you to be able to sell premium products. Is that on the cards?
Actually, we see synergies both ways, Mangalam, right? So Floats is, even in the kiosk that we've launched, Floats is Floats by Bata, right? So there is an endorsement, there is huge awareness as well as trust that consumers have with the Bata brand, right? How do you make sure that you are able to provide, as I said, straddle both premiumization, infuse technology, and provide affordability? I think is the secret that we would like to straddle going forward. Doesn't take away from the fact that some of the initiatives that we have done, as I mentioned, the banners that we've got of Hush Puppies, and now the nascent banners that we have initiated in the last year for Floats as well as Power, are also a trajectory towards tackling certain use occasions from consumers and therefore the role that the brands play in it.
Final question. Last 3 years, your revenue CAGR has been just about 3%. Even if you look at the post-COVID disruptions, etc., that again is a lot lower than all the other competitors in the market, at least in the listed space, which have reported their numbers. Where do you foresee this growth trajectory in the very near future? And the medium-term targets that you've given, how long before you get to that double-digit growth?
Actually, there is a, so within this price points above, basically, let's say 1,000 have seen actually a double-digit CAGR. So it's been the lower price points that have been under pressure from a revenue CAGR perspective. We hope that that will also turn around with some of our initiatives that we have mentioned, as well as obviously the consumer sentiment turning around on that front. But in the medium term, we want to look at a double-digit growth for sure.
Back with us here on Halftime Report. On to some key earnings that are in line to be reported later today. Dr. Reddys is one of them, and Vinny is joining in with the key expectations. Vinny.
Yeah, so in terms of revenues this time, we are expecting a 12% growth on a year-on-year basis. Margins expected to see a bit of a muted performance, a 100 basis point decline is what we're watching out for there. While in terms of the profits, also a muted performance on a year-on-year basis. Now, revenue growth, what is leading the growth? India business expected to see a strong growth, high double-digit growth of around 15-16%. Sanofi vaccine portfolio of the company, that's also expected to see good sales growth this time. While the US sales ex-Revlimid is expected to remain flat around $300 million. Last quarter, it was $305 million. So on a quarter-on-quarter basis, maybe a muted performance is what we are watching out for. Now, Revlimid, that's the generic Revlimid sales, they are expected to be at around $90 to $100 million. And margins, the impact on the margins mainly is because of higher competition in some of the other products. That is impacting the margin, and that is why a slight bit of a decline there, 100 basis point. Now, moving on to important factors to watch out for. Commentary in terms of the US-based business, how is that performing? Margin trends. Anything commentary in terms of new launches coming in, as well as outlook on Revlimid is something that one should be watching out for.
All right, Vinny, thanks a lot for that. We'll keep an eye out on Dr. Reddy's numbers, should be out sometime soon. Meanwhile, just leaving you with some good news as we slip into a short break. Network 18's Money Control is India's leading digital financial platform. It's achieved the remarkable milestone of surpassing 10 crore unique visitors in the month of October 2024. This is according to data from Google. Achievement further widens Money Control's lead over India's top business and financial news platforms.
Welcome back, and joining us on the show now is Amit Goel. He's co-founder and chief global strategist at Pace 360. Amit, hi, thank you so much for joining us. Happy festivities. I want to talk about gold first of all. And while we did see all-time highs in the previous week, we've seen some profit taking. It's kind of flat as we approach the three big events of this week. One, of course, the US presidential elections, the US Fed meeting, and then the China National Congress Party meeting as well. The presidential elections first, and how are you approaching that? What's your sense on the impact of dollar index and the gold prices within this week? A very short-term sense first.
Firstly, thanks for having me on, Manisha. So see, as far as the US elections are concerned, while the world is glued to who's going to win the presidency, what is actually more important is there going to be a clean sweep by the Republicans? So if Trump wins the presidency, but at least one of the, if the House of Representatives, if that goes to the Democrats, because Senate is definitely going to go to Republicans, there is a very high probability that Senate is going to go Republicans' way. So in case Trump wins without a Republican clean sweep, then dollar index is actually not going to go up. Dollar index is probably going to go down. The US bond yields are probably going to go down. And this pressure which has been on the emerging markets in the last few weeks, that pressure will go away. So there is about a 32-33% probability of a Republican sweep. We all need to be extremely cognizant and extremely concerned about that probability playing out. In every other scenario, my sense is that dollar index is going down, US bond yields are going down, emerging currencies are going to go up, and the emerging market equities are also going to go up in every other scenario. And now coming to gold and silver, I think the path of least resistance in the near term for gold and silver is down, because they have outperformed every asset class on the planet in the last about 13 months and also in the last few weeks. They are now significantly overbought in the near term. So my sense is, unless and until there is a powerful trigger which catapults them upward, my sense is that gold and silver are probably going to be sideways with a downward bias.
Amit, you said that is a near-term trend that you would foresee into the markets, because yes, gold and silver are overbought, and we've seen prices continue to gain in last many months without a meaningful correction there. But for a longer term, and various global banks and brokerages still believe that once these events this week is done with, next year is still on the bullish side. 3,000, 3,100 in case of gold is something that we still are seeing on charts. How would you look at a longer term scenario then for gold and silver both?
So, Manisha, we have been long-term bullish on gold for quite some time now, and we still remain extremely bullish on gold. We believe that it would not be correct to just look at gold for the next 6 to 10 months or even 12 months. I think you need to give it 3 years, because on the back of a 55% jump in gold prices in dollar terms in about 13 months, we need to be cautious on gold in the near term. So I would not go on to say that next year we are going to see 3,000 or 3,100, 3,200. But I would say that if you can wait for 2027, then I'm definitely seeing gold above 3,500, probably even above $4,000 an ounce. But I am extremely cautious on gold and silver for the next few months because of this huge run-up, because of this huge outperformance, and because of the fact that a lot of people have joined the bandwagon. And you know that when an asset class, almost there is a near unanimity on any asset class for the next 3 months or 6 months, you know that that is not the best of time to bet on that asset class. So we are actually, while we hold on to our long-term positions, long positions on gold, we are actually very cautious on it for the next few months. And we will probably increase our holdings maybe a few months down from now when we believe that a lot of this euphoric and optimistic vibe on gold has sort of already played out, and now the sentiment has normalized, and the pendulum may not swing from one end to the other, but at least the pendulum is somewhere close to the middle and not to the extreme right the way it is right now. We will probably add on to our gold investments for the long term, but not now.
So, Amit, when you say that you expect profit taking in gold and silver both, and you will add as prices do correct, where do you see this correction coming into for gold prices now? And if you look at the next 3 or 4 months, let's say, and we do know that by the time it's Christmas and holidays, there is some, unwinding of trade that happens, and that would lead to perhaps prices decline further from here. So where do you see that support come in?
Manisha, I would say that the next 6 months is the time when this correction could play out. So my time is about March to April. And my sense is that gold could come down to somewhere in the vicinity of $2,550 to $2,525. Because that, that there was this stop which was made in July, August, which was at $2,531 an ounce. And gold made several attempts to break that in the next few weeks. There were 5 or 6 attempts. It did not manage to do that. But once it broke through that level, then we know what happened. From 2,531, we went all the way to $2,787 a few weeks back. So my sense is that there is that vacuum in gold between 2,525 to 2,550 levels. I would be very happy personally if we see that price over the next 6 months, because that would be a price where you can go long on gold and sit on it for the next 2 to 3 years, and it will only make money for you.
All right. One final question, Amit, and I want to come back to your first answer where you said that you do not expect a clean sweep in US presidential elections, and that would take the dollar index down. I mean, this is a scenario that a lot of people have been talking about as well, and not too many people believe in the strength in dollar index going forward. So if you are expecting a decline in dollar index, at this point in time, trading between that 103 to 104, do you see 100 breaking, and where do you see prices eventually going?
No, Manisha, we do not see 100 breaking. I think we saw a level of about 100.15 about 2-3 months back. I don't think we are going to see that level anytime soon. So my sweet spot is that dollar index, which is currently at about 103.8, and only on Friday it has made a high of about 104.4. So it has corrected by 0.6% in the last 2 days because the market started doubting the Trump trade, because you know that the probability on the betting sites and the polls, they have been sort of favoring Kamala Harris in the last few days. So dollar index has corrected by 0.6%. If there is no Republican sweep, my sense is that dollar index could come down to about 102. But I definitely do not expect it to go down all the way to 100. But even if it comes down to 102, Manisha, it's going to be great for emerging market assets. It's going to be great for even Indian equities. And I think we are going to probably end the year on a rather more optimistic note in the emerging markets in India, considering that last few weeks it's been a bit of a brutal correction in India particularly, but in the emerging markets in general.
Take that point, Amit. Thank you so much. You and Manisha talking so much about commodities, and you also alluded to the weakness in the equity markets over the last few weeks that we've seen out here. Seems like some of it is coming undone right now. We've seen some recovery from the lows for the Nifty Bank, which has now cut its losses to just about 100 points. So it's an up move that we've seen from the lows on both the Nifty as well as the Nifty Bank. The move on the Nifty Bank and the Nifty can be attributed to HDFC Bank, which is just about moved into the green. Recovery from the lows on that index and the metals index as well, which has now moved to the high point of trade. So we'll keep an eye out on all of this as we progress into the next half of trade. Stay with us on CNBC TV 18.